Hello everyone, Dan Geltrude here, and welcome back to Token Money Magnet, the only show where you don't just learn about the future, you stake your claim in it. Today, we're diving into the wild, cutting-edge world of tokenization's next big moves. We're talking innovations that sound like sci-fi, but are happening right now. Dynamic digital assets, tokenized energy, and even AI and blockchain teaming up. This isn't just about money, it's about reshaping how we create, connect, and care for the planet.
Artificial intelligence and blockchain are converging to transform tokenization. This partnership is creating unprecedented opportunities across industries. In practice, AI algorithms analyze market data to optimize token valuations, while smart contracts automate transactions, enabling fractional ownership of illiquid assets. Security is paramount in tokenization. AI systems continuously monitor blockchain transactions, detecting fraud patterns, and ensuring regulatory compliance without human intervention. Looking ahead, AI-enhanced tokenization will enable predictive analytics for investment decisions and autonomous trading across multiple blockchains.
The numbers speak for themselves. We've witnessed a Deutsche Bank's groundbreaking $104 million tokenized bond issuance last quarter, slashing settlement times and reducing costs by 35%. Meanwhile, Singapore's MAS has onboarded 17 major financial institutions to their Project Guardian, tokenizing over $500 million in real-world assets since early 2024. To discuss more on this, we've got two incredible minds with us today. First, I'm thrilled to welcome Beka. Your name is a little tough, so I'm going to go with Beka. He's the CEO who is leading real-world asset tokenization for FU Capital, where he's building infrastructure for debt capital markets. Beka is known for building high-performance global teams and driving operational excellence. Next, we're joined by Yael, Tamar, co-founder of DIBS, a platform making asset investing accessible and transparent. She is recognized as a top 20 prop tech influencer, top 25 blockchain and crypto speaker, and one of the 100 most inspirational women in blockchain, an achievement that speaks volumes about her passion for technology and innovation. So, Yael, real-world tokenization is still in its early stages, requiring further research and development. As governments and major institutions deepen their exploration of this space, what key innovations and factors will drive its evolution in the future?
Well, thanks for the question, Daniel. I think that it's clear that the compliance issues and challenges have been largely resolved. We've been waiting for about 7 years for clarity from the governments regarding what type of security token regulation should be in place. So that type of issue that we've been talking about for a while, I think now we've reached the absolute clarity. Now, the only big challenge on the way to tokenization becoming mainstream is the ability, the actual physical ability to secure the collateral for tokenized assets. Now, in order to actually understand what I just said, which will sound like Chinese to a lot of people, right? There's tokenized assets, there's collateral, there's everything. Maybe first we should dive into what tokenized assets even are, what tokenization is, right? Tokenization is placing of any sort of a non-digital asset on the rails of blockchain for the purpose of transferring those assets between different individuals or for the purpose of conducting different operations like trading or collateralizing these assets to issue loans, for example. So that is tokenization. Now, tokenization is based upon regular financial principle. So you have the collateral underneath the digital asset, which is the actual asset. Could be private equity, could be commodity, could be rights to dividends, things and IP, for example, right? So I think the biggest challenge out there right now is actually securing that collateral. And that is the biggest innovation that is required. And that's something that our company, Distributed Brokers, actually facilitates.
Beka, major financial institutions like BlackRock and JP Morgan are investing heavily in tokenized assets. What lessons can smaller players or startups learn from these initiatives, and how can they compete in this rapidly growing market?
Yeah, of course, all these major institutions like BlackRock, like JP Morgan, they have competitive advantage. They have advantage with regulatory compliance and trust between investors. So the only ways that startups can compete their infrastructure or financing, for example, is to specialize in niche sectors, like in niche segments. And besides that, of course, in all domains of the business, they should be agile as much as possible. And besides that, what major institutions are kind of missing from their strategy is retail investors. So in that sense, also not only tokenization, but fragmentation of real-world assets will help startups to attract retail investors who are not like high-value net worth individuals. And in that sense, they can invest much kind of in a much lower threshold. So in that sense, this market, for example, emerging markets, are untapped, and it can be utilized by startup companies.
In the expanding universe of blockchain, interoperability is key. It's the ability for different blockchains to communicate and interact, creating a seamless flow of tokenized assets. Interoperability enables the transfer of tokenized assets across diverse platforms. This is crucial for unlocking liquidity and expanding the reach of RWA tokenization. Plus, it allows for the creation of more complex and innovative financial products, fostering a more interconnected and efficient tokenized economy.
Tokenized green bonds are emerging as a way to fund renewable energy products. How can AI and blockchain technologies work together to enhance investor confidence in sustainability-linked assets?
Daniel, that's a very complex question, I would say. Let's unpack that a little bit into smaller pieces. In terms of sustainability products, I would say that's a niche product that is reserved to various funds, institutions, and government entities. They have been and they have become much more available to investors that are interested in supporting these causes, and are also at the same time were unable to participate because of the sizes of the investment tickets usually. Why are investment tickets usually very high for products like private equity, for example, or real estate? Well, it's because of the cost of transactions. Most of the securities are sold, when the securities are sold or transferred between entities, these transactions are normally expensive. They're facilitated by banks and investment banks, and there are various processes like KYC, know your customer, anti-money laundering, different levels of compliance are required, and they're expensive. This is where blockchain is a very useful technology. Very few people out there are talking about the cost benefits of blockchain, which, according to HSBC, in terms of securitization costs, were lowered by about 80%. So I think this is one of the major things that blockchain has done for transfer of securities or transactions of securities, is lower the cost significantly. So now you can have lower tickets, you can have more investors participate. So that's in terms of blockchain. In terms of AI, in fact, AI needs blockchain. This needs to be clear to everyone. In the next stage of AI development, we're going to see AI agents being able to perform various tasks and to go in and participate in transactions. But how can an AI agent participate in transactions? The only way you can actually go and authenticate, the only way you can go into an account, a bank account, and start paying, I think you guys know where I'm going with this. This would be smart contracts on the blockchain. This would be an agent accessing a wallet and facilitating a transaction. So AI and blockchain go hand in hand together, and you see a lot of applications doing this right now. Now, how is that linked to sustainability altogether? I would say that that this will create also a world that has a much more sustainable way of doing business.
So, Beka, with stable coins like USDC now holding treasuries, the line between TradeFi and DeFi is fading. Could we see a future where regulated stable coins replace banks for corporate cash management?
I don't believe that in this radical way. I think that the future will be hybrid. And as we see, like many big banks or institutions, or for example, payment systems like MasterCard is joining with OpenAI and partnering. So OpenAI will provide them their wallet. And we see also many TradeFi, traditional finance players, like big banks, who already, for example, in UAE, who already adding like crypto assets purchase opportunities for their users. So in that sense, I don't see that there will be like only stable coins or only stable coins with banks. No, it will be a hybrid. And also we see, for example, some platforms which were mostly like fintech platforms like eToro, who are already also moving on that direction. So they are adding more asset classes which are related to crypto and to blockchain. So in that sense, I see that we will see many partnerships in the future between fintech, blockchain, and traditional finance institutions.
Yael, tokenizing carbon credits has been highlighted as a critical use case for sustainability. How can blockchain and tokenization ensure transparency and trust in carbon offset projects? And what role will this play in meeting global ESG goals?
Daniel, this is another question I would say that relates to the major benefit of blockchain for radical trust and transparency. So any sort of an asset, so carbon credits are also an asset that can be leveraged, right? This is one of the major uses of carbon credits. You can use it as a base asset, borrow against it, or you can trade them, you can accumulate them, and so on and so forth. And this is an asset that has value. However, the issuance of carbon credits is done by specific entities that then have control over verifying the authenticity, right? And so it's very difficult to trade an asset that is very it's difficult to verify its authenticity digitally, right? So blockchain allows placing of such assets like carbon credits and a few others, and placing them on chain, placing them in this immutable ledger, which has smart contract capability. What does this mean, that something has a smart contract capability? It means that you can build applications on top of it that can perform various financial operations and use that capability, use that common ledger, this public or permissioned blockchain, to enable investors, potential investors or potential lenders, to verify the authenticity of those assets. And there's really no other technology in the world that is able to do this efficiently and in a cheap manner, in a cost-efficient manner as blockchain.
So, Yael, social tokens are emerging as a way for creators to monetize their influence by giving their communities a stake in their success. These tokens can offer exclusive access, rewards, and governance rights, but there's a risk of them becoming purely speculative assets. So how can social tokens be structured to build real sustainable communities rather than just fill short-term hype?
That's a great question, Daniel. I think in general, the market for social tokens and kind of this mainstream use of blockchain by non-developers, non-banks, it remains to be rather small outside of, I would say, the gaming community, where, especially in the emerging markets, tokens have become the great resource and the tool for rewards and engagement. And another industry that has greatly benefited from this is sports and professional sports, where fans' engagement is crucial because the whole reason that this industry exists is because of the fans. So I think we should take we should learn the lessons from traditional industries, non-crypto industries. How are fans incentivized? How are users and influencers on social media today are incentivized? And maybe apply a more sustainable practices, right? Than, let's say, ads revenue or views and likes on things that are controversial in nature and that create this toxic environment on social media today. So I'm praying for there to be different types of social media, digital media. You know, I have small kids that are growing up, and I'm hoping that they will grow up in a more in a kinder environment. However, I am skeptical of that trend emerging. So to summarize, I think that what the mainstream social media networks can do and what crypto networks can do in order to create a better and more fair distribution of revenue derived from using the influencers and just common users' data and engagement would be to create fair incentives for everybody to do more sustainable, kinder things, and facilitate engagement for the greater good.
So now we'll move on to my favorite part of each show, questions from our audience. So Beka, this one is for you. How do we know tokenized carbon credits are legit and not just greenwashing?
Great question. Actually, it is complex question, but maybe I will try to break down it to kind of simple details. So first of all, when we are using blockchain, we are providing on-chain transparencies. So in that sense, we see all the information are on the blockchain saved and no one can change it. Besides that, there are mechanisms when third-party certifications are issued for carbon credits. And besides that, we see that, and I think there will be much more emphasis the proof of retirement. So which means that when these carbon credits are used, we should see it on-chain. So in that sense, we will kind of avoid double spending of the same carbon credits, and we will avoid of the fraud risks. Besides that, we, as in maybe in any domain of RWA, there should be enhanced KYC procedures to see and to control who is buying what and where these funds are coming from.
Okay, this next one is for you, Yael. With the tokenized asset market expected to hit $10 trillion this decade, what does this mean for everyday investors? Will the average family's portfolio in 2030 look completely different from today?
It's a great question, Daniel. I think that new asset classes emerge once a decade and we see the evolution of asset classes out there. But I think the biggest and the most interesting trend in blockchain is that the mainstream use of blockchain is when nobody knows that they're using it, right? So you're not really thinking about the mechanisms behind your, your Airbnb or your Uber that gets to your door, right? That the internet and authentication is used on the way, different transactional capabilities, different fintech technologies. You're not really engaged in it. You're just using your app and clicking. So what we're going to see in 10 years with respect to people's portfolios is a much more diversified portfolio because, again, tokenization and blockchain made a lot of processes simpler and cheaper. So now you're able, instead of owning, if you only have $100,000 or maybe even just $1,000, you can own many more assets that you bought with that money. So you're going to see greater diversification in both types of asset classes and the amounts invested, and you're going to be able to see a lot more control. So self-custody of these assets, instead of having them sitting in all kinds of different accounts on interactive brokers, Robinhood, Coinbase, you're going to have one wallet on your device or wherever it's going to be sitting, and you're going to have access to all the capabilities of reporting, managing, leveraging. So, I'm really looking forward to that era.
Beka, AI is changing how we value intellectual property. If AI models can now price tokenized patents, what does that mean for how royalties are distributed and who gets paid?
Great question, Daniel. So AI, of course, also in crypto, already it's kind of playing a big role. For example, we are using AI to identify frauds or the tendencies, if there is activities which is not kind of normal one. But when we are talking about using AI for IP and how royalties will be kind of more or less more clear way will be divided, for example, our creators. In that sense, we need to hear some refinement. So I think that we are on early stage using AI in blockchain and for IP rights, for example, how we can, in a more better way, to share and to divide these royalties to content creators, for example, right? So in that sense, I see that in the future we will see for sure better models, better structures, and better and more clever infrastructure for that. Because right now we are on early stage and we don't have much experience what works, what not, and I guess it will take some time to have clear understanding what experimental product will work the best and will provide us the best results.
Okay, well, I'd like to thank our two guests today, Beka and Yael, providing really fantastic information for our audience. So thank you. And wow, what an incredible journey through the world of real-world asset tokenization. From AI-powered smart contracts to trillion-dollar markets, we're not just watching the financial revolution, we're building it token by token. This is Dan Geltrude reminding you, stay hungry, stay innovative, and most importantly, stay tokenized. Until next time.